Welcome back to another Ask Jay, the CPA. Today, we're focusing on small business deductions. Are you leaving money on the table? Before we dive into our first tip, it's important to know the foundation of all business deductions. The IRS allows businesses to deduct expenses that are considered ordinary and necessary. This is a key principle outlined in Section 162 of the tax code. Think of it this way. If an expense is common for your type of business and is helpful for carrying out your trade, the IRS generally allows you to write it off. More about that later. Now let's talk about some of these key expenses. Maximizing retirement contributions. This is one of the most effective ways to lower your taxable income. Small businesses have great options like SEP IRAs, simple IRAs, and solo 401ks. By contributing to these plans, you not only save for the future, but also get a dollar for dollar deduction against your taxable income, sometimes worth tens of thousands of dollars. Another deduction is a home office deduction. If you use part of your home exclusively for your business, you can deduct a portion of your rent, mortgage interest, utilities, and other home-related expenses. Open for interpretation. The IRS also has a simplified method for doing this too, where they give you something like, mileage. Everybody's familiar with mileage. They have a simplified method, but that method may not give you as large of a deduction as the full method if you have the proper records to substantiate all the full, deductions. Finally, let's talk about Section 179. This allows you, instead of depreciating large equipment purchases over several years, it allows you to deduct the full cost of qualifying assets like a new computer, furniture, or a vehicle in the year you buy and use them. This is a huge incentive to invest in your business. Invest in your business and can create a large deduction at the end. These are just a few of the many ways to strategically lower your tax liability. I want to say something else. Understand that a business deduction only benefits you if you have profit. So you'll hear people out here telling you that you can go buy, a spaceship or, a G-Wagon or something like that. But understand you have to have some income to offset it against. If not, the expense, the 179 write-off, will just sit there and you will have no benefit in the current year. So people often kind of think about business deductions like they can generate a refund. Well, you only generate a refund if you pay money in or you get a refundable credit. But most people in small businesses are not getting refundable credits, nor are they making their estimated payments to pay it in. So if your motivation to buy a 6,000 pound vehicle for your business is the deduction that you think is gonna, bring you some money back, I would seriously think twice about that and go speak to somebody. I don't know, a tax professional maybe, and see what they say. But anyway, happy shopping. For a deeper dive on these topics, be sure to tune in to Hayward CPA Live every other week at 11 a.m. Eastern Standard Time. And also subscribe to the channel. Put your alerts on. This has been another episode of Ask Jay, the CPA. I'm Jay. Peace out.